Global tech majors such as Facebook, Google, and Apple are in the process of pruning their workforce. Twitter, too, has shut 2 of its 3 offices in India. Back home, IT sector bellwether Infosys and Wipro too are going slow on hiring and have delayed their visits to campuses. The story at the bosses, however, is playing out differently. The Nifty IT index has been the best performer with a rise of around 10% thus far in the calendar year 2023 as compared to the Nifty 50 index, which is down around 0.5% during this period. Among stocks, Persistent Systems has rallied around 28% so far in 2023, while TCS hit an over 7-month high last week as investors turned to defensive plays in a volatile market. Analysts say the upmove follows firm Q3 results from the sector, which have prompted investors to relook at the stocks.
I don't think so. See, in terms of the post-quarter Q3 numbers, the pattern given by the management was absolutely clear in terms of hiring new talent with respect to the demand and supply kind of a scenario. I am quite optimistic in terms of, basically IT industry is all about utilization of gray cells, that is brains, and how innovative contribution can employees give to the organization. A lot of people had stayed away from it. Third quarter, they have totally changed in terms of how to approach IT sector. We as a brokerage house remain positive. My only sense is that they may go slow for some short to medium term period of time, given the kind of environmental backdrop which IT sector is emerging from. So as and when the opportunity arises and they have to hire, they will do the needful. And possibly in terms of quarterly numbers, I think since we've seen a stable third quarter number, fourth quarter should be a little bit better. Next financial year onwards, that is 1st April onwards, I think there should be better times for IT.
Meanwhile, according to HSBC, earnings forecasts for S&P 500 companies in the US have plateaued or declined for almost a year now across most sectors. The worst impacted include consumer discretionary and high-tech. This does not bode well for tech budgets in 2023, it believes. As we further analyze business commentary from top customers from key sectors such as banking, telecom, retail, and high-tech, the outlook for 2023 tech budget growth ranges from flat to slightly positive. We believe this will impact IT companies over the next few quarters. Back home, G. Chokkalingam, founder and CIO at Economics Research, expects IT companies to pass on the rise in employee costs to end customers, while rupee depreciation will be beneficial for the firms, he says. IT stocks had corrected sharply before the start of 2023 and valuations had become attractive. There is room for more upside in select counters, but investors need to be selective. We are bullish on Oracle Financial Services Software, Cyient, Zensar Technologies, Susken Technologies, and Wipro, says Chokkalingam of Economics Research. Broadly, investors should be selective as regards the IT sector and buy where there is earnings visibility, at least for the next 2 to 3 quarters. On Tuesday, the markets could remain range-bound amid stock-specific action.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.